Okay, my friends, here we go. Lots of stuff to talk about. Sit back, relax, and enjoy the ride. So yes, it is Wednesday, October 5th, 2022. People, look, I don't know where I want to start this. We just got, let's see, 1, 2, 3, 4 more rounds of abysmal economic news, and it's not going to stop as the global economy continues to crater as central banks, fulfill their end game here. And that's what they're going to do to destroy the economy and a whole class of people with it. It's so sick to watch this unfold. Anyway, before we talk about the economic news here, let's look over at the market here. More specifically, all right, let's look over at the debt market. The 10-year yield, as I am doing this video blog, is 3.70. All right, just about 5 basis points higher than where we closed yesterday. Nothing major here. But look, these movements, as you all know, I've been telling you, in the debt market, this is not normal. The debt market is supposed to be the rock. It's supposed to be stable. You're not supposed to have these yo-yoing bond yields. I mean, it's an incredible situation. Over 40 basis point drop in the 10-year yield in just a few days. Now, we're coming up a little bit. The dollar here this morning, the relative strength of the dollar is strongly higher. What is that? Why are we seeing that? That's fear. Whenever you see a move, like we had a profound move lower in the dollar yesterday, the relative strength of the dollar. All right. An enormous rally on Wall Street after the 10-year yield dropped, dollar dropping. Last 2 days have been unbelievable. As a matter of fact, the last 2 days have been the best start to a quarter since 1938. That's pretty profound. And I wonder yet again, who's doing all the buying? I mean, come on, people. We know who's doing this. It's just a game. But anyway, on the back of this 10-year yield, moving slightly higher today, and this what looks like fear to me, a little fear, because of this knee-jerk higher in the dollar. You got stock futures lower. Okay, we just had 2 pretty profound days of stock market rallies. Should we freak out about that? No. But we got to continue to watch the drivers here. If we see, for example, another big sell-off here in the debt market, yields start to rise, dollar resumes its climb, where do you think stocks are going to go? Exactly. Lower. If we see the 10-year yield stabilize where it is now, a little higher, it don't matter, dollar coming down, MMRI coming down, maybe stabilizing, where's the stock market going? It's going higher. Very, very simple. And if OPEC plus, plus what? Plus their ass, okay? If they get their wish here, and they're going to, more production cuts here, and if Biden continues to send hundreds of billions of dollars to fund a war that you didn't vote for, I didn't vote for, this is an incredible thing here. Of course, it's the mechanism here. But you see, President Biden won't tell you that he must do that to support central banks. Every single president must outspend the prior president. Every single one. Trump did it too. Obama, they have to do it to empower the global financial system via the central banks. Every single president is a slave to the central banks, to its central bank. None more so than here in the United States. Period. Find any reason. Convince people that they have to do this, they have to do that, do the other thing, just to inflate the debt and allow central banks to continue their debt-based economic model in perpetuity and get stronger. Because what does this do? Every time a president, an act of Congress, sends billions of dollars over here to pay for that, billions of dollars over there to pay for this, institutes this program, that program, central bankers, they wet their shorts. They spray all over the place here because, again, that's what central banks want. They need a puppet sitting in that White House who will continue to pull cash into the now from the future and disperse it. How much of this cash actually, just focus on, President Bidenstein for a moment, Frankenstein here. He's mummy man, whatever you want to call him, because that's what he looks like to me. A cross between Frankenstein and the Mummy. I don't know, both played by Boris Karloff. Actually, I think Biden over there looks exactly like a mirror image of freaking Boris Karloff when he was in mummy attire or Frankenstein attire. Anyway, yeah. How much of that cash, the hundreds and hundreds of billions of dollars that you have approved, right? Of course you did, and to fund the war. How much of it actually goes to that? How much is actually going into the pockets of oligarchs and whoever else? It's just a game. I bet 5%. 5% is probably a good round number. The rest of it is all going to make people richer, of course. And, there's nothing you can do about it because, this is the land of the free, home of the slave. Yeah, really free? How's that working out for you? I don't think it's working out too well. But anyway, so this morning here, we got this issue in the debt market, another little sell-off, knee-jerk higher in the dollar, stock futures lower, pointing towards the lower open. Let's see where this goes. Let us refocus on a few other things here. You know what? Let's stick to the market for a moment. Silver's under a lot of pressure this morning, over 3% down. Pretty big run lately, though, higher with regard to silver. Gold under pressure. You got crypto still holding around 20,000. OPEC Plus trying to push crude oil higher, and they will. Okay, this is going to help the banks. This is going to help the energy sector. And the game here is to push stocks higher. You know that. Let's touch on this economic news, people. So the private sector added, this is an incredible thing. Last month, 208,000 jobs. Might as well be zero. And this is the number they're letting us know. What an abysmal number. Now, the month prior, revised number, 185,000 in August. Wow. Is that what a booming economy looks like? How about no? How about freaking no? Duh. Okay. We also found out that U.S. mortgage demand fell. It's just a pretty astonishing number. 14.2% in 1 week. In 1 week. Now, and mortgage refinancing fell 18% in 1 week. That's 86% lower than a year ago. Pretty incredible. Now, here's another thing I want you to pay attention to. So we added these jobs. We added some jobs here. Oh, okay. Meanwhile, we have now more than 50% of CEOs of large corporations saying they're considering more job cuts over the next 6 months. So let me ask you, how are we supposed to believe any of this bullshit? I don't think any of it's real. You know all that. It's all just dog shit, wrapped in cat shit, sprinkled with bird shit, horse shit, monkey shit, hippo shit, whatever shit. They want to wrap it in, they want to package it and tell you how great everything is. Oh, these numbers came in better than expected, but they're not going to tell you how terrible they are because they can't. They have to sugarcoat it all, and that's just the way it's going to be. There's no doubt about it. Anyway, look. Let's just summarize here. There's a little fear in the market today, like I said earlier. And you can tell that because of the knee-jerk in the dollar. Whenever there's fear of whatever the market's afraid, it's so afraid, it's afraid. Whenever it's afraid, boom, you get this knee-jerk higher in the relative strength of the dollar. And you know this, people. Look, we are in a full-blown currency collapse. Have you heard a word about that? Have you heard a single word about that from the mainstream propaganda ministry? Oh, no. You can't know that because they have to tell you that the issue of surging inflation is because of rates. Rates are too low. That's why you're seeing surging inflation. It's not because the currency is dying. Imagine for a nanosecond if we had one mainstream commentator who didn't read the script and told people the truth. Hey, people, we got a problem here with the currency. Imagine President Mummy Man. You know what would make me stop picking on Mummy Man? I'll tell you right now. If Mummy Man were to say, hey, everyone, listen, we got a problem here. The currency is in collapse because central banks have gone crazy, none more so than the Federal Reserve, in their quest to continue to inflate, in their quest to destroy an entire class of people. But no, he's going to put out tweets talking about this slugger guy and his new home run. Oh, that's what he's going to do. But he can't tell you the truth about a damn thing. Imagine my surprise. Imagine my surprise. Anyway, I'm sure you're just as surprised as me. All right, people, look, consider things I've spoken about. Talk about it amongst yourselves. Please comment here. Let me know what you think. And it's going to be a nice ride today. Let's see what happens. Some miracle. Are we going to see the 10-year yield drop? A reversal in the dollar today? Is the sell-off, which looks like it's going to start in this market because futures are lower across the board, is that going to reverse? Let us see. It's going to be interesting. Yeah, no one ever said I was normal. I will see you later. I'm out of here.